Hello, and thank you for listening. My name is Luke Mardigian, and you are listening to Be Insured, where we talk about business, leadership, and insurance. That way, on your worst day, when you need it the most, you will be insured. Before we get into today's topic, I want to tell you about an amazing resource we created just for our listeners called the Ultimate Commercial Insurance Roadmap. This guide breaks down the 4 major things every business owner must look out for in order to save more money and ensure their company is properly protected. You can get your hands on this guide right now by heading to beinsuredonline.com. That's beinsuredonline.com. Business owners, you work hard for your success. You have poured blood, sweat, and tears into your business, but you could be in a position where you lose it all, that someone just takes it all away from you. And as an insurance agent that specializes in commercial accounts, I've seen it all, and there's nothing worse than watching a hardworking business owner endure a nasty lawsuit without the proper liability coverages. And during today's show, we'll explain what general liability protects you from, how much coverage you realistically need, and share some crazy cases where fellow business owners were saved from a mess because they had the right coverage. I'm excited to be joined by my awesome co-host,
Eric Gestring, the Mardigian Agency,
and our fantastic guest expert,
Roger Graff, Vice President of Claims Farm Bureau Insurance.
Awesome. Luke, I'm going to kick this off with you. I think a great way to kick off the conversation is to give the listeners a rundown of what general liability is. Can you explain that for us and why this is important coverage and it's so crucial for business owners?
I get to go full insurance dork on this one, don't I? You know, when you think liability, there's really 2 pieces that you have to be present with business. There's some spin-offs to that, but I'll just keep it really basic for you. Somebody has to be injured. So it's typically bodily injury, like someone slips and falls in your properties. You operate a crane and you drop a crane on somebody, something crazy like that. Someone's hurt. There could be injury to the mind or reputation also. So it's not just your body's hurt. It could be a number of other things. And then the second piece is something's damaged. Property is damaged somehow. And typically, at least every general liability policy I've seen covers some aspect of those 2 things. So that's general liability, and it's part of every business owner's policy, or we call it the guardian. Sometimes it's a standalone policy. If you're in business and you're making any type of income at all, you really need some type of liability coverage in place. Even if you're a hobby farmer, you need some coverage in place.
And why is that so crucial?
Because if you don't have $1 million in the bank to where you can just pay an attorney whatever you want to defend whatever lawsuit somebody brings against you because they think you're a business owner and they think you have tons of money just laying around, not realizing that you poured every penny you have back into the business. Yes. And unless you have that money on hand, you have to transfer that risk to an insurance company.
That's what we're here for.
And let them pay for the attorney to defend you. Let them settle it if that's what's necessary, and keep your capital in the business where it should be.
Amen. Roger, what types of general liability claims are coming through your department?
So as Luke mentioned, both property damage and bodily injury. We also see personal injury as well, and advertising injury. So those are the 4 types of claims. And when you think, if we jump into a bodily injury situation, you're thinking as a business owner, when am I or an employee going to injure someone, by accident? That's never, ever going to happen. So I'll give you, and these examples, these are real. These are claims that have either been presented and settled or are ongoing.
Mm-hmm. That's why we love having you here.
That's we have one recently where our insured small warehouse, they're back in the warehouse. They have a forklift, they're loading, unloading, and they happen to have an electrical contractor in the building as they were working. They had some work being done, some sort, and the electrical contractor, he was up on a scissor lift, if you will, and the forklift was moving around, and he accidentally hit the scissor lift and knocked the guy right off the 20 plus feet in the air, knocked him. He came through the rail, he fell, shattered both heels. When you shatter your heel, I mean, you can't it's non-weight bearing. I mean, extreme injuries. And the fractures didn't stop there. I mean, there were fractures well beyond the heels. They were in the lower part of the leg on one, and then the femur on the other. So extreme injuries, which you would have never even thought that anything like that can happen.
Yep.
And it can happen at any time, again, by accident. I mean, that's just
who is responsible for that?
So what happens is, since the employee did it, it's the employer that's responsible. So it falls right back to the employer, and that's why it's so important, to have the proper general liability policy to cover things of that nature, which you would never think of. But that claim in itself, that's a $500,000 claim plus.
Easy.
So if a business owner has no insurance because they think they're going to be able to get through without paying for that, big mistake.
Yep. And in the world of insurance, we always get this question from business owners, how much coverage is enough? Nobody wants to overpay for insurance, but nobody wants to be underinsured. And the industry standard for our listeners, I'm sure you've seen it on your policies, is $1 million per occurrence, $2 million aggregate. That's kind of like the foundational coverage. We maybe 4 or 5 businesses a year that we're quoting will run across to $500,000 limit, which is terrible. And we don't quote anybody that low. So it really does come down to how much income potential your business has. Potential. Not even necessarily income today, because if you start making money in 6 months and that's when they decide to sue you, that's what they're going to base it off of. That's how much money you're going to be able to pay out.
And that's why you should be in regular contact with your agent, discussing changes, growth, all these things.
We actually we'll use gross sales or gross assets. Just like personal liability, we use gross sales or gross assets as kind of a baseline. So if you have a business that does $2 million in revenue, okay, obviously you're not making $2 million off of that as a business owner. If you are, I want to sign up for that business. But let's say you make $2 million a year. Well, we want more than $2 million of liability coverage, because no jury is going to understand that you don't actually have $2 million, that you just run $2 million through your business.
They're not going to, the jury is not going to be concerned with what you have or don't have. Nope. And the jury has no idea that's insurance involved anyways. They don't look at it that way, and they're actually instructed to not even think about insurance. So they're just looking at the pure injury, the pure liability. What did that business owner do wrong? And if they did wrong and there's severe injuries, then it's, then your fate of a business is in the hands of a jury.
Yeah, right. And that's a really scary thing. When for me, I've poured 5 years into my business. I have no plan B. This is it. This is what I want to do for the rest of my life. If it's something that I lost, it would be heartbreaking. I'm sure our listeners feel the same way.
Luke, do you have any stories that you can share with us about where we've saved a business owner from a mess because we've properly insured them? I'm sure you do.
Yeah, honestly, there's this coverage on your workers' comp policy. Every workers' comp policy is pretty much the same. It's regulated by the state of Michigan. If you're out of Michigan, then you probably have some weird laws, and I'm sorry. But we had one where a guy claimed he slipped and fell on a back porch delivering pizza. And right away, the business owner got a hold of me. I think it was the day after Christmas. So he's texting me on, we're obviously all off for the holiday. Hey, this happened right away. My manager told me that we think it's kind of suspicious because he had said some things earlier in the week. Well, there's an employer liability coverage on your workers' comp to where if you do something wrong, like send somebody out in hazardous weather, you've ordered them to do that, you could be liable for it. Well, because he had the policy in place and because it was the Farm Bureau Insurance of Michigan, we properly investigated that claim and nothing was paid.
We have an example where our insured had a machine shop, a very small machine shop, and he had a lathe, and what he did is he jury rigged the lathe to where would spin an 8-inch diameter piece of metal. Well, he jury rigged it to spin like an 18-inch piece of metal. And obviously the machine wasn't built that way. So the employee came up and went to cut it, and the employee says, "I can't do this. I mean, there's no way this is going to," and the employer said, "Look, if you don't do it, I don't know where you're going to be," meaning it wasn't an absolute threat. Well, it wasn't an absolute, but kind of, sort of. So the employee, put the metal on there, started turning it, and it came off and hit him right between the eyes.
Wow.
So that's an example. That example there where it's still a work comp situation, but that gets into that gets into the other section of the work comp to where the insured was grossly negligent.
Yep.
If the insured is grossly negligent, then then the sky is the limit. The non-economic, the pain and suffering comes in.
Yep.
That will inflate the value of the claim. Whereas work comp, it takes that out because regardless of fault.
Yeah, and just like general liability, there's limits to that. You can pick two, and we see $500,000 all the time. That's just not sufficient. We do $1 million, and we throw an umbrella on top of that, so you have $2 million. That'll take care of most problems.
And we're still less.
Yeah, and our price is still less. But we don't sell on price, Eric. We sell on value and coverages.
It's just nice to have that savings. But
sure is.
Also, Luke, do you have anybody that you can share at least a story about where they've lost everything because they didn't have the coverages right?
I think Roger probably has something.
Yeah, come on, Roger.
To lose everything, I mean, that's a rarity, no doubt about it. But what happens typically is that when a claim goes over the limit, what happens is that for instance, if we had $500,000 in coverage and the injuries or the property damage is worth more, we'll thoroughly investigate it. And then what we'll do is if it exceeded it, we would offer whatever the limit is. And again, the other party, if they don't take it, then that's where we go to trial, and they could be on, they can get a judgment against them. So we've seen where our insureds, unfortunately, have had to do things. It cost them personally, in terms of property or things of that nature. And it's not that it was a direct claim against. It wasn't that the other party directly could claim anything against them. It was in order for them to get out of the suit, they had to come up with some form of cash. So it just forced their hand, because otherwise they would have a judgment against them. And then anytime they'd take a loan out, anytime, it adversely affect their credit. Mm-hmm. So they couldn't continue. Yep. So what they'll do is, they'll have to go through and they'll try to make up for the difference. And the other party, they won't, if they take our money that we offer, then they have to sign a release. Well, they won't take our money. So they leave the insured in the case, and that's where the struggle becomes, where the insured says, all right, well, I'm going to sell this property or sell these vehicles or whatever to come up with the money, the agreement of the difference. And then it will go away, but then it costs the insured personally. And I mean, that's what insurance is for. It's not for somebody to,
that's
personally
a big setback. That's easily 10 years.
One of our commercial clients called me on a snowy day last year and said, how much liability do I have in my auto policy? That's not for an agent. That's not a good thing. That means something bad happened. Something's
happening.
Yeah. And so I told him, and he goes, okay, well, nothing happened, but I just heard a story. One of my competitors last year in a snowstorm just like this had one of his employees slide out of control and hit somebody who was already out of their car in the ditch and killed them, and ended up being a $2 million judgment, and they only had $1 million in their auto policy. And so he said, can you please increase my limits up to $3 or $4 million today? I don't care what the cost is. He said that $1 million extra, the overage that they were stuck with, the access judgment, yep. He said that they anticipate it'll take them 7 years
to recoup
the cost from that one lawsuit. When that extra $1 million liability policy, I mean, an expensive umbrella policy for a business might be a couple $1,000, $3,000, $4,000. So, you have to be able to transfer that risk. Even if you have the cash, why would you want to waste 7 years of your business?
That's why that umbrella policy that you shared earlier is so crucial. That's why we add that on to every.
Yeah. I mean,
every
most of them are $500 a year, but for those.
Well worth it. We, just a bizarre claim.
Yeah.
So we had a scenario where our insured is and was a contractor, and he took a job outstate, took it down in North Carolina, and it was to restore a historical building, very nice building. And, he bid on it, he got it, he went down there, and it was just to refinish, the woodwork, the lath and plaster, things of that nature. Nothing to do with welding whatsoever. So he gets down there to the job, and he's working, and he noticed, on the back side of the building, there was a very old fire escape that was rusted out. Just, it was an eyesore. So he didn't realize what part of the contract was, I need to take care of the fire escape. So he didn't know what to do. He didn't have a welder. He's down in the Carolinas. He doesn't know. So he literally puts an ad in Craigslist for a welder. All right. So, resources, right? Yeah. So sure enough, a guy comes along and says he's a welder, and,
But he had no insurance.
So, Eric, you're right. You know the rest of the story.
How that story ended, Eric.
So this is a subcontractor now. I mean, just keep things straight here. How things work. So he's a subcontractor. So he gets up there on the fire escape, and he's cutting it out, and all of a sudden he catches the building on fire. and the building is over $500,000 in damage. And here's a guy that was going down there, and it was not a very large job. I mean, it was under $100,000 to renovate because it was just and so this historic, it burns down to the ground. So here's the, here's the welder standing there and like, oh, I'm really sorry. Well, turn in your insurance company. I don't have any insurance. I have nothing. So ultimately, our insured was responsible for that damage. Yep. So you never think what's going to happen, but pay attention.
Yep, and make sure you have proper coverages. We talk about liability in our free report. Go to beinsuredonline.com to download that. We'll send a email right to you right away that you get a download link. Here's some more about liability and how to properly protect yourself. As an entrepreneur myself, I know you work hard to build your business, and I'd love to make sure that you're protected. Give us a call at the Mardigian Agency or follow us on Facebook and Instagram, the Mardigian Agency. That's Mardigian. Thanks for listening, and we'll see you soon on Be Insured.